Okay, and we are live. It is Wednesday, I believe, January 10th. This live stream, again, after the market closes, although we still have 5 minutes. Today, we're going to focus a little bit. I'll first start with the SoFi announcement, then talk a bit about the Bitcoin ETF, because apparently this is the new thing that everybody is talking about for the last couple of days, couple of weeks as well, even though for Bitcoin itself, let's be honest, nothing here changes. I made the analogy on X that is basically like legalizing marijuana. It's basically that. More on that a bit later on. I'll just double check if everything is working correctly. In the meantime, come in, join. Of course, you can. Okay, the sound is working. You can always ask questions in the chat, specific companies. We're going to have a look at those companies later on in this video. So yeah, in the meantime, let's look at how the market is looking right now. Let me share this. Pa-pa-pim, para-bam. Voila. So right now, it seems like we will finish in the green, not by much. Dow Jones 0.39%, S&P 0.4%, Nasdaq 0.55%. It's okay, not red, but could be better. If we look at the companies that we are tracking here, Meta still outperforming, up 3.68%. I believe it's at all-time highs or close to probably. Yeah, very close to all-time highs. So that's great. Unity up 3.57%. That's been a roller coaster ride, up, down, up, down, up, down. Palantir up 2.29%. Nvidia up another 2%. I have a pretty good Nvidia video coming up. Microsoft up 1.84. SoFi is up 1.74. Melly, Amazon, New, Shop. Shop has been on a good ride recently. HIMS up just 1%, and then the following here are barely green. The ones in the red are again Pinterest, PayPal, Teladoc, Disney, Coinbase, Tesla, again underperforming. Had an exchange with Gary yet again today, but always friendly. So yeah, Square underperforming by a lot today, 2.32%. So just got a weird message that popped up. But yeah, anyways, first thing I want to touch on is this right here. Let me zoom in a bit so that you can see better. Voila. So SoFi, of course, I made a video today about SoFi, the layoffs, what investors should know, the effects of it, why this happened. So before, when I made the video, I didn't know exactly how much the cut will be, but now we have here that confirmation by SoFi itself. So we conducted a small reduction in force yesterday. We plan to continue to grow our team in 2024 and remain committed to continuing to deliver strong GAAP profitability and grow tangible book value by doubling down on our most important company priority. By the way, it says here, committed to continuing to deliver strong GAAP profitability. Emphasis on continuing. Then, while the headcount reduction was less than 4%, okay, so not the 7% that was reported, of the total population and broad-based across the company, it is always hard to separate from valued team members, and we will be doing what we can to make the transition as seamless for them and for the team as possible. Okay, so at least we have some clarification on that, which is always great. Again, my point still stands. I think with the Technisys Galileo merger, I think it was bound to happen to cut some people off. Then maybe the tech is even better, so you need less people to work on that. Someone also commented with regards to the crypto business being closed. That should maybe be a reason as well to lay off some people. So these types of companies, especially SoFi, this is not a traditional bank. They don't really need, in my opinion, they don't really need that many people working for them. But yeah, we'll see. I mean, it's like, what company was it? DocuSign also had 7,000 employees or something. I mean, why should a digital document signing company have 7,000 employees? Just doesn't make any sense. Yeah. So that's that. Moving on to Bitcoin. So first up, I want to make this extremely clear. When we talk about Bitcoin, everybody still think that this is the decentralized currency for the little man, etc., etc. This has not been the decentralized currency for the little man for a long, long time. Okay, it's not even a currency anymore. If you talk to people about Bitcoin, nobody that I've spoken with talks about Bitcoin like it's a currency. I've never met anyone that has actually spent Bitcoin to buy something. The only thing you do with Bitcoin is trade transactions, right? You buy, you sell, you buy, you sell, you wait 30 minutes, you pay a fee, and that's about it. Most of the people would say, yeah, but it's a store of value. The value of Bitcoin goes up. Why is that? Because someone is ready to pay more for a Bitcoin. There is a finite number of Bitcoins. I know miners, it costs energy. So that is all calculated in the price. But let's be honest, if tomorrow the majority of people say, F Bitcoin, I want to sell it, the price will go down. Doesn't matter what you've been telling yourself, the price will go down. The only reason the price goes up is not because of the fundamentals. This is not a business. The price goes up because someone else is ready to pay more to buy that asset. That's it. Same with sports cards, same with Pokemon cards. That's just the gist of it. Not a Bitcoin hater here, but let's be realistic. And also, I posted this. A 2023 Fidelity survey found that 52% of institutional investors hold Bitcoin and other cryptocurrencies. A report by Grayscale estimates that around 40% of the total Bitcoin supply is held by identifiable groups, including exchanges, public companies, governments, and mining companies. Bitcoin isn't controlled by the little guy. It hasn't been for years. So yeah, if you think that you hold Bitcoin because you don't want the government or whatever to control your assets, your money, well, you're pretty late to the party because they already do. That's just that. And then I'm not even going to go into the whole conspiracy theory that Bitcoin was created by the CIA, the NSA, to make you think like you're in control of yourself, but they actually control the whole system. It's a funny theory. If you have time to go read that, write CIA, NSA, Bitcoin theory, and enjoy that. Moving on, we have the saint here, Cathy Wood from ARK Invest, going to talk a little bit about the Bitcoin.
And that's what. And Cathy, I'd like to start with you, and I'd like to start with the obvious, and that's what happened yesterday, a little bit after 4 p.m. Of course, the SEC account on X tweeting that they had approved spot Bitcoin ETFs. We then heard within minutes from the SEC that that was the result of unauthorized access. So first of all, what is your reaction to the hack? And in your view, does this delay the decision process around spot Bitcoin ETFs at all?
Well, we were on with you, Katie, last night. Both Ophelia and I were on with you, and we saw this come up, and I said, what's that Bitcoin logo doing in this SEC release, and why is Gary Gensler's face there? But we thought we had confirmation from an exchange. Turns out it was a hack. We, from all that we can see right now, it is not going to delay the arrival of a spot Bitcoin ETF. But again, you never know. You can never say 100%. There's something very important about what Ophelia just said. 21 Shares, our partner, has been up and running for 5 years with 40 funds before we partnered with them. And they have been through extremely volatile markets through forks and halvings. This is different. This is not like another ETF. So one of the reasons we partnered with 21 Shares is exactly what Ophelia said. They have already scaled in a way that very few have. And 21 Shares is the largest pure play crypto ETP provider in the world. So really important to make that observation.
Thank you for explaining that and giving that context.
So there you have it. If you missed the whole thing that happened yesterday, was pretty funny. Basically, the SEC account was hacked, not because of the security on X, but because apparently the SEC doesn't think it's important to have two-factor authentication enabled on their X account. Oops. I wanna show you one thing. I asked yesterday, why is it important? Why does Bitcoin need an ETF? Wasn't asking this out of hate, just wanted to know, why does it need an ETF? Of course, now that I made the analogy that it's like legalizing marijuana, it makes it makes more sense. So first answer here I got was from Wealthy Readings. Sure, doesn't change anything in terms of how to invest, but I think it does a lot in terms of image. It's a way to really legitimate the asset. He wrote a whole thing about that. Okay, fair enough. Hodamer from Stockcard, institutional investors can buy it without regulatory concerns. So I asked, why not just buy Coinbase, Hood, or Block? It is for direct access, but many institutional investors are not allowed to buy Bitcoin directly. But an ETF will be like any other ETF and give them direct access. It will give legal Bitcoin access to institutional investors through 401k, IRAs, pensions, etc., which, by the way, this also means that you, in the United States, you will be able to do the same thing with Bitcoin that you've been doing with stocks, for example, and put it in your Roth IRA and not pay taxes on it until, what is it, 60 something, which is pretty cool. I'm very jealous of that. One year said, so the market makers can manipulate it, but I already said they own the majority of it. It's a great way to get Bitcoin exposure into a non-taxable account like Roth IRA. Basically, it's that. So BlackRock can be a liquidity dump for people who really hold the coins. Again, these people don't know that the majority of Bitcoin is already owned by institutions. So yeah, will be interesting. I think it's always the same thing, right? Buy the rumor, sell the news. So when the news comes out, well, I wouldn't be surprised. I wouldn't be surprised if there is a small dump. But yeah, all in all, we'll see what happens. I have exposure to Bitcoin through the likes of Robinhood right now, Block. I used to hold Bitcoin actually. Good afternoon. Good afternoon to you too. Good afternoon to you too. To me, it's a good evening. Good evening. Up next, how investors can navigate possible offerings. So let's have a listen.
Well, the Securities and Exchange Commission is up against its Bitcoin ETF approvals deadline. And with the approvals so imminent, it's important to understand what it means for the investor. So how should you be thinking about the new additions to this ETF space? As part of our ETF report brought to you by Invesco QQQ, let's bring in James Seifert, Bloomberg Intelligence Research Analyst, to discuss more. Thank you for joining us this morning. Obviously, a lot of buzz surrounding these spot Bitcoin ETFs as we await approval here. But lay out what investors actually get out of this if they choose to invest in a spot Bitcoin ETF.
Yeah, I mean, Brad did a great job explaining everything from a high level. Like, that's all it is. What the way to think about this is it's creating a bridge between the DeFi or crypto world, in this case Bitcoin specifically, to the traditional financial world. So what they get out of it is they can get exposure to Bitcoin in a traditional brokerage account, or if you're using an IRA or what have you to get exposure in this case, this is just going to be the same way you would buy another ETF. Now, as you also said, if you never wanted Bitcoin and you never wanted to hold Bitcoin, like this this ETF wrapper isn't going to change anything about Bitcoin in itself. It's just another way to provide and get exposure. And it's been exciting to watch over the last few months. We've been calling for this to happen, and we've had this deadline circled on our calendars for literally months. So I've I've been waiting for this day for a very, very, very long time.
And we got a bit of a jump scare yesterday, but obviously that that was not the actual announcement. But as you compare some of these, obviously you have a flurry coming in here, 10 or more coming in here. So, but when you look at the fees, when you stack them up against each other, when you look at Grayscale's Bitcoin Trust, you're looking at fees of about 1.5%, much higher than some of the other counterparts here. How should we be gauging which ones are best if you say a buy and hold investor versus someone who wouldn't mind perhaps hopping in and out of this?
Yeah, so I mean, right now, Grayscale's GBTC is the de facto leader, right? They've been operating as an over-the-counter trading trust that holds Bitcoin. It's been an inefficient vehicle to get exposure, but for a while, it was the only vehicle to get exposure in those traditional accounts, like I spoke about. They can trade at it was trading at massive premiums initially, then it was trading at massive discounts to the underlying Bitcoin. So it wasn't tracking the price of Bitcoin. That said, if it were an ETF today, it's not yet. It would be in the top 1% of ETFs by assets and the top 1% of ETFs by trading volume. So they have a massive head start here. They have about $30 billion in assets in that thing. So they don't feel the pressure or need to drop that fee. I don't know exactly why they're leaving it so high at 1.5%. It's been operating at 2%. They've been saying they were going to lower it. I thought they would lower it much more. But if you're looking for a buy and hold investment, obviously you're not going to jump in and just look at GBTC. But if you're an institution or somebody who's looking to make a trade, GBTC, at least initially, and probably for the relatively long term, is going to be the most liquid vehicle. I mean, obviously we'll have to see how that plays out over the coming days, but we're expecting these things to list tomorrow. But a good rule of thumb is just look for a relatively cheap one. Some people are going to be focused on, maybe they don't want BlackRock managing their Bitcoin exposure. Maybe they want to focus on an issuer that is more crypto centric and Bitcoin focused. So there's going to be a lot of marketing, a lot of pushing here, trying to jockey essentially and get assets and compete with each other. And the end investor, when all this jockeying is going on, and we've seen this massive fee war, honestly, the last 5 or 6 days, we've seen massive drops in fees. We've condensed a year's to 2 years worth of fee wars of these Wall Street firms competing with each other, condensed into a matter of days. It's been absolutely fascinating to watch.
And so as you also look at some of the key investors in this space, some of the big names that we saw in the S1 filings, what are the standouts and where are you seeing them really gravitate?
Yeah, I mean, so there's a lot of firms involved in this process, right? So a lot of the big name Wall Street firms are involved here, right? That are being third parties for these ETFs, whether it's Bank of New York Mellon, State Street, JP Morgan, Virtu, Jane Street. They're all involved in this process, but the filers in this case, there's 11 of them. I don't know if I could try to list all of them from memory, but essentially we have you have Grayscale at the top. They are the first ones. But then you also have Bitwise. ARK is partnered with 21 Shares. You have Fidelity, Wisdom Tree. Invesco is partnered with Galaxy, Valkyrie, BlackRock, VanEck, Franklin Templeton, Hashdex, which already has an ETF operating, DeFi. They're unique in the sense that they are just trying to convert a futures fund to be holding spot. And then and that's all of it. That's 11 that we're expecting to launch tomorrow. But there's been 14 filings. There's 2 more that could come to market after this. One is going to hold carbon credits. So it's going to be fascinating to watch. We've never had a situation here where this many ETFs are launching that are doing essentially the same exact thing as each other. So it's going to be fascinating to see who's able to eke out a victory here.
And so with so many to pick from here, what are some of the risks, though, that people should keep in mind if they're thinking of investing in a spot Bitcoin ETF?
I mean, risk-wise, it's just any risk you would think of investing in Bitcoin itself. Like if you don't feel comfortable holding Bitcoin itself, you probably shouldn't consider holding these things just because it's a very volatile asset. But there is undisputed fact that Bitcoin added to a diversified portfolio of a 60-40, whether it's a 2% allocation, 5% allocation, it has drastically improved the performance and the Sharpe ratios of those portfolios. That said, this thing goes through multiple 80% drawdowns, right? So those are the main risks you got to think of. And all the other ones, for the most part, I would expect them to have similar risks as far as potential things being hacked. I think that's highly unlikely. These are storied institutions in many cases, and the people that they're partnered with on the custody side, namely Coinbase, Gemini, BitGo, and Fidelity is actually custodying its own assets for their ETF. So the risk on that side, or you will have to read the documents. But for the most part, I'd say you just need to understand what you're getting into when you're investing in this asset class. That's really what it comes down to.
It certainly should be a rule of thumb in general when you're investing.
Well, I guess there we have it, a full explanation on, well, all the options that you have. Again, I think holding Coinbase could be probably a very, very good play if you just want exposure to not just Bitcoin, but the whole crypto movement. Apparently, I cannot click on Coinbase here. Oh, no, I can. Okay, cool. But of course, I mean, the stock itself has run up quite a lot in the last year, probably in anticipation of everything that's been happening. So yeah, we'll see what happens with that. I believe we have a question. You should look at Realty Income. I did look at Realty Income. It featured in one of the dividend videos a while ago, but I did look at it when actually it was just below $50, I believe. EPR Properties both pay a solid dividend. Yeah, I know. It both paid also a monthly dividend, I believe, right? Also, Boston Omaha is great and trading at a Bitcoin at a discount. Okay, let's see. Let's have a look. Let's have a look first at Boston Omaha. Let's have a look, shall we? By the way, I have just received a message, pretty interesting, with regards to Palantir. I don't think I can share it live, but I never thought I would get a request like that. Anyways, Boston Omaha. So apparently here, if you go on Seeking Alpha and you look at the factor grades, valuation is a D-, profitability is a D- as well. The only good things here are the revisions and the growth, which probably means, yeah, the stock has gone down quite a lot. For those that don't know, Boston Omaha, together with its subsidiary, engages in the outdoor billboard advertising business in the Southeast United States. It is also involved in the surety insurance and related brokerage, broadband, and investment businesses. Now, let's have a look here. By the way, there's a link for a discount for Seeking Alpha if you're interested. Helps the channel out and helps yourself out as well. And now, if we go here on Koifin, 20% off as well in the description. On Koifin, we can see, well, first of all, there is no PE anymore, forward PE. And the rest is not that cheap. I mean, it's cheaper than its 5-year mean. That's okay. That's one thing. But yeah, overall, it's not that cheap, right? 41.9 times EV to EBITDA. Price to sales 4.8 times. Price to free cash flow, forget about that. Shares outstanding, yeah. Probably the projections, not that great. I mean, we've seen much better companies before. If we look at EPR Properties, here, declining revenues, by the way, projected declining revenues for the coming years. So that's not excellent either. With regards to a dividend, the dividend has not grown. That's the thing also, by the way, just because they pay a monthly dividend doesn't mean it's a good play. I'm just putting it out there. Usually monthly dividend payers aren't good plays, besides the king of that, which is Realty Income. Realty Income, I mean, even it's very stable, good REIT and all, but we've already looked at so many dividend players out there, and despite them paying you 5.21%, right, a yield, in the last 10 years, the annualized growth was just 3.82%. So not that much. I mean, even if you look at someone that isn't paying you so much in dividends, Microsoft, yeah, it only has a dividend yield of 0.78%. But if you look at the 10-year, the annualized growth, 11.14%, meaning 10 years ago you got 28 cents, you're now getting 75 cents. That's much better. I would rather get this than just take realty income for the sake of getting monthly dividends. Think about that. So yeah. EQT and Enterprise Product Partners are great oil companies. EQT. Okay, see, EQT pays you a 1.67% yield, but here as well, the last 10 years, annualized growth 17.4%. You got 3 cents 10 years ago, you get 16 cents. Of course, there was a period of no dividend when the oil prices were basically at zero. And here we've got some reacceleration in fiscal year 24 and 25 for price to sales and for sales, not price, for sales and EPS. If we look at shares outstanding, it went up quite a lot, but free cash flow per share went up as well. I'm not following the companies. I would assume this is either equity raises or they acquired stuff. What else? What do you think of Flux? I don't know. Never heard of it. So Flux Power Holdings. Yeah. Not great, huh? Not great. Flux Power Holdings. I don't even know what I'm looking at here. Definitely some accelerating revenue growth expected. Flux Power Holdings. It designs, develops, manufactures, and sells lithium-ion energy. Okay, another lithium player. There are so many lithium players out there. If you want lithium exposure, just go with the biggest one. Just go with the biggest one. Go with miners, iron ore, whatever, or Tesla, or lithium. What is it? LAC? Lithium Americas, even though they still haven't done anything. So maybe not them. There's another player out there. Can you please review Aritzia earnings report? I don't even know what Aritzia is. So they design and sell apparel and accessories for women in the United States and Canada. Wow. Okay. What happened here? Okay, they have quite a lot of growth. 99% year-over-year growth for EPS, then another 27.5%. Interesting. 10 analysts. The average price target sits close to 22% higher than where we are today. If you look at valuation metrics, it's all lower than the 5-year mean, besides price to free cash flow that has disappeared, which you can see right here, but previously it went up. So definitely something to look at. So yeah, this is not great at all, which is probably why free cash flow has gone to the negative territory as well. Gross profit margin was closer to 45. Now it's closer to 39. Pas incroyable. If we look at calendar year 2024, gross profit is expected to decrease. Gross profit is expected to decrease. Cash from operations is expected to increase. So free cash flow becomes a bit better next year. Still not positive, but cash from operations should increase 230%, which is nice. Which is nice. Okay, interesting. Earnings history. When was this? A while ago. Okay. Oh, so they reported earnings. Good afternoon. It's Lululemon's twin with super cheap valuation. Well, the difference is I'm a guy and I know Lululemon, but I don't know them. But if you say it's a twin, let's compare. No, not this. Let's compare. Don't compare me. Yeah, so definitely, yes, definitely cheaper on all metrics, besides the obvious, which is price to free cash flow. So yeah, okay, definitely cheaper on that front. If we look at Lulu, at least Lululemon has continuous free cash flow and growing. Besides 2023 right now seems to be a bit lower. Shares outstanding have come down, but it's still expected to grow mid double digits here, teen double digits, 15, 14% year over year. So yeah, definitely not cheap, just like their products, not cheap at all. But okay, interesting, Aritzia. Let's, how do you write this? Come on, why can't I find the earnings report? Let me just copy this. Much better. Okay. Okay, so all in all, there's not, okay, it grew revenue. This is Canadian. They grew revenue 4.6% year over year. Gross profit margin decreased 180 basis points to 41.5%. And non-GAAP EPS of 47 cents. If you look at the stock, it's down 47% the last year. So yeah, not that great of a performance. So okay, interesting, but there's probably more to the story, I guess. Again, if you're interested in the apparel stuff, then yes, maybe this becomes a bit interesting stuff. So Aritzia profit before items fall 30%, but tops expectations as revenue rises, sees lower margin for the fiscal year. So it's basically a type of recovery story, I would guess. Yeah, we'll see. Okay. Which casino company do you think would be the best play for the new casino licenses in New York? Only 3 total. I was thinking Las Vegas Sands. Let's see. LVS. Las Vegas Sands. We can compare it to the traditional ones. MGM. I don't know if it's specific to a license or whatever, but I'll just compare it to the 3 I know here, which is LVS, MGM, and Wynn. Why is it showing me this? No, I want this. MGM and Wynn. So if we compare all 3, I'll just remove your comments so we can see a bit better. If I compare all 3, so Wynn is the most expensive. All of them are pretty close, one with each other. Wynn 20.4 times forward PE, LVS 18.2, MGM 18 times. If you look at EV to EBITDA, most of them, all of them are in the 9 times area. Then price to sales, that's where things are a bit different. So LVS is at 3.1 times, MGM 0.9 times, and Wynn at 1.5 times. If we look at price to free cash flow, MGM 10 times, which is not that much, LVS 29.1 times, and Win 19.7 times. So I want to look at solely MGM right now, because that's interesting. Yeah, so MGM is pretty strong. I mean, shares outstanding, free cash flow is already positive, unlike what we've seen before. I believe that was LVS, right? LVS, which is, let's do all yellow for LVS. Yeah, so LVS shares, yes, has come down a little bit, but not as much. And free cash flow is, as you can see, not great. Not great. It's red compared to MGM. So there is that. If we go and look at the projections for MGM, not that much revenue growth for next fiscal years, right? 1.5% and 2.19%. But EPS 3.8% year-over-year growth, and then close to 16%. So accelerated growth. EPS with regards to LVS, there you have more growth. There you have more growth right now. 18% fiscal year 2024 year-over-year growth for sales, 47% year-over-year for EPS. Then another 19% for fiscal year 2025 with regards to EPS. So yeah, interesting. But right now, I would say that MGM is stronger. MGM is stronger with regards to Win. Single-digit growth for sales, but EPS growing faster as well. Oh, they do still pay a dividend? Oh yeah, they do. But I wouldn't really count on that when buying casino stocks. So, okay, interesting. All I know is that they are loved here in Canada. When they do sales, their lineups are 2 to 3 times long. Well, that's great for the customer. That's great for the customer. But when they do sales, it's probably they're making less money, which is not that great for the investors. But okay, good to know. Good to know. I didn't know the brand, but for those of you that are interested, maybe it's worth looking into if you think that Lululemon is too expensive. It looks very classic, casual-ish clothing. Looks comfortable. So yeah. Let's see. What else do we have? Let me put this here. I did. Yeah, this is ridiculous to me. The iRobot and Amazon merger still not happening is completely ridiculous. Like, I mean, it's a $1 billion deal. How long does it take? It's really crazy. Salesforce and Slack implementing a hiring freeze. Okay. Yeah. Other than that, I don't think there's much to add here. Let's oopsie. So yeah, with regards to the casinos, I hope you had your answers. I don't know if I answered exactly what you wanted, but hopefully I did. Let's see if there's something interesting to show you. 1 second. AMD. Okay, I'm glad you asked about AMD because everybody's talking about Nvidia and shitting on Intel. So AMD. The question here is, I don't know if you are following AMD. Of course I am. I've been following AMD for a long time, actually. I bought shares at $22, sold at $64. Yes, I know the shares are now at $148. What can you do? What can you do? You live and learn. But do you have any predictions of how much revenue they will bring in this year for AI accelerators? I can tell you what the analysts are expecting for AMD as a whole in fiscal year 2024, which is this number right here, $26.53 billion, which if you look at the estimates, back in July 2022, the estimates were $32 billion, so quite a drop. But still, it's a 17% increase year over year, which should increase another 17% for fiscal year 2025 to reach $31 billion. Then, with regards to EPS, that should grow much faster, so 44% growth in fiscal year 2024, followed by another 34% growth the fiscal year after that. But we know that in 2023, they did take a hit with regards to profitability. The average price target sits 3% lower than the price we're at today. Shares outstanding have increased. This is obviously because of the acquisition. Free cash flow per share has turned positive in 2019 and has been positive since then. So that's great. With regards to valuation, we are now much more expensive. Much more expensive. If you look at PE, but just because it's expensive, like I said, 2023 was not a great year when it comes to profitability. Fiscal year 2024 and 25 should become much better. So yes, if you look at the 5-year mean, right now it seems very expensive, 44.6 times forward PE, 53.1 times EV to EBITDA compared to a 5-year mean of just 30.6 times, price to sales 9.5 times, very expensive, price to free cash flow 181.5 times, again, very expensive. And by the way, I don't know if you know this, but Nvidia, if you look at Nvidia, for example, which I'm going to put in green so it's easier for all of you to see. If you look at Nvidia, right, you would think that Nvidia would be more expensive, but Nvidia, the stock has gone up extremely fast, but its business itself has gone up extremely fast as well. And so right now, Nvidia, much cheaper than AMD on all metrics. Forward PE, EV to EBITDA, price to sales is the only one that is more expensive at 15.4 times, but price to free cash flow is cheaper. If we look at the growth rate for Nvidia, look, AMD was expected to grow 17% for the next 2 fiscal years and 44 and 34% for EPS. If we look at Nvidia, the expectations are for the next 2 fiscal years, 54% year over year, and then another 19.8% for sales, and EPS 62 and another 20%. So sadly enough, I don't know why people would be buying AMD, although it's a great business. Right now, crazy enough, Nvidia is a better choice. I know I've said 6 months ago, Nvidia doesn't make much sense to buy because the upside is, let's say, limited in the short term, which I was right. I was right because the stock didn't really do much in the last, well, when was it? When the stock was around $490 or so, didn't do much. Yes, in the last couple of days, the stock has soared. I mean, last couple of days, it's up 10% or so. But yeah, I mean, I'm biased because I hold Intel. I still think that Intel right now, looking at their price, if we look at Intel, for example, they are expected to grow 13% year over year in sales for fiscal year 2024, then just 9.19% in fiscal year 2025. I do expect this this number to change dramatically if they can prove that they are well on track. But EPS is basically doubling in fiscal year 2024, and then another 42% the year after that. If we look at the comparisons, Intel to Nvidia, purely stock-wise, not the company, of course, stock-wise, Intel is a bit cheaper right now. Not that much, a bit cheaper. And so, yeah, to me, it's, I mean, I like AMD. I've backed the company. When was it? When, yeah, again, $22. So when Lisasu came in a bit after that. So yeah, maybe they can blow our minds just like Nvidia did last year, and suddenly you get a re-rating on the upside. Then okay, could make sense. But right now, no, I would say that still Nvidia is a better pick. And if you really want a bit riskier, but to me more upside, if it really works out, if their foundry business really works out, if the next generation of chips for Intel works out, which for now they are on track, then Intel is a pretty good pick. So yeah, that's just my opinion. Any thoughts on Meli? Seems to be a big, I mean, it's not only seems to be a big e-commerce giant in Latin America, but yeah, it's a very big position in my personal portfolio as well. It's the number 3 position in my portfolio. So those are my thoughts. Incredible company, incredible management. Yes, one stock, one share will cost you a lot. In this case, almost $1,600. Yes, it does look expensive, but it's much cheaper than it's been. That's because the company is growing top and bottom line quite fast. If you want to look at the metrics here, they're expected to grow basically the next 2 fiscal years, above 20% year over year for sales, and close to 40% year over year twice for EPS. So yeah, again, tremendous company, tremendous total addressable market. Plenty of growth ahead with an $80 billion in market cap. Yeah, that's true, but everyone said the same thing about Nvidia before their first AI accelerated earnings report. I don't think growth estimates are fair for AMD. The difference between both of them is that before Nvidia reported that huge guidance, right? Remember that? Before Nvidia did that, the stock crashed, right? The stock was down a lot. AMD is now up a lot since it crashed, right? So that's the big difference. If you look at the last, I mean, if we were still at these prices right here, right? If we were maybe not as low as 60, but if we were still at the prices right here, $80 or so for AMD, then I would agree with you. I would agree that it would have been a bit of the same as Nvidia, but that's not the case. That's not the case. We have gone up over, 50% since then. Not much has changed. Yes, it's true. I was about to say this. Yes, they are only accounting on $2 billion, but I think they can exceed $10 billion in 2024. I don't think they can. I mean, it's 5 times higher than what they themselves said. Maybe they're sandbagging, but I don't think they're sandbagging 5 times that. So yeah, TSM manufacturing capacity is maxed out. I believe it is. Right? I think the likes of Apple have taken control of the majority of it. But then again, that's where players like Samsung and Intel come in. Whether AMD wants to use those things remains to be seen. But I don't think you can compare AMD to Nvidia. AMD stocks is well elevated. The company is not at the same stage as Nvidia, if we're being honest. Everybody's talking about competing with Nvidia and stuff like that. I think they had their years where basically Intel were sleeping before Pat came back, which is extremely stupid, and so they had pretty much the whole field to catch up. But now I think it's going to get much more difficult. Can you Can you give Marcos a shout out? He's new to investing and we are listening to you live. Well, shout out to Marcos. I believe you're from Mexico if I'm looking at the colors of your logo. So hola Marcos. I'm happy to have you here. And good luck investing. It's not as difficult as people tell you it is. You just need a lot of patience and discipline. Patience and discipline goes a long, long way in investing. And of course, if you have questions, whatnot, always write in the comments. I'll read and answer all of the comments. I'm trying to start a position in Meli. I know I shouldn't really be timing it, but I do see a major gap to be filled in the low 1400s. Yeah, I mean, this was a conversation I had yesterday with someone asking about position sizing, how to allocate to position and stuff like that. We are entering earnings season pretty soon. Tomorrow's CPI report can add to the volatility. So yeah, if you're looking for that gap, you can wait. You can wait for that gap. Most gap gets filled, not all of them. That's fine. Or you can open a position, a small one, right? If you have, let's say, $1,000 to invest, you invest only 20% now. If it goes down and fill that gap, you add another 30% or 20%, and you continue like that. Of course, I will cover the earnings report whenever that comes out in February. Hi, Rick. How are you? I hope you have a wonderful day. My brother is a big investor in real estate. Oh, that's commercial real estate or any specific real estate? What do you think about Halo? A very good game. A very good game. No, but let's look. Oh, it's a therapeutic. Oof. It's always technical with these names. Oh, I need to buy a new chair. Not comfortable. Halo. So first of all, the description for Halo, right? The description for Halo, it's a biopharma technology platform company researches and develops and commercializes priority enzymes and devices in the United States, Switzerland, Ireland, Belgium, Japan, and internationally. I always love when they add internationally after they put various countries that are international. Okay, so they're focused on specific enzymes. I'm not a biologist, but I know what a woman and a man is. But yeah, the analysts are expecting it to grow quite fast in fiscal year 2024, 30% and 34% for EPS. If we look at the price targets, it's 45% higher than where we're at today. That's quite higher. It does look very cheap. It does look very cheap. I will add it to my list of companies in that sector. You are giving me in the last week or so plenty of companies in the healthcare, in the biotech sector that are pretty interesting. So I thank you for that. I'll probably make a video about those things. So thanks. Thank you. I don't know when the video will come out, because these companies usually take a while for me to understand actually what they do. I don't just like to make videos about stuff without actually understanding. So yeah, I have many stocks that are undervalued in the biotech space, pharma, or just in general. Yeah, that's an interesting one. I did put in my screener here companies with a market cap in general. Okay, so shoot. Give me two other interesting companies, preferably not in the technical area, but yeah, I'm interested to see what you found out. So this is one of the screeners I have. Basically, market cap greater than 2 billion, revenue estimates year-over-year growth between 0 to 20% for the first fiscal year. Then after that, we have EPS growth greater than 20%. And then another for the next fiscal year, EPS growing another over 20%, which gives me a list of these stocks right here, which Tesla is number 1, Atlassian number 2, Ares Management Corporation number 3. I mean, number 3 is it's ranked by market cap here, not by revenue growth estimates. Take-Two Interactive is still on that list. That's pretty amazing. But in my opinion, the stock has gone up a bit too fast. But Team here, ticker symbol Team, that has been on that list for quite a while. What's happening here? Why do I have EPS? Never mind. Yeah, shares outstanding have gone up, but at least free cash flow per share has gone up as well. So that's great. It's actually pretty impressive how much of an increase. Yeah, not bad. What's your opinion on Tesla and its valuation? I mean, I talk about Tesla every week on Saturday, the Tesla weekly video. So I think my thoughts are shared there. But overall, nothing has changed. Nothing has changed. I think the stock is a bit under pressure right now because, it is not cheap. The auto market still under pressure as well. EVs with Chinese companies selling cheaper stuff. Tesla's margins, question marks, etc., etc. I'm still very bullish Tesla. I mean, it's my largest position for a reason. But yeah, next earnings report will give us more answers. In the earnings call, hopefully Elon will come with more answers than question marks. I think that could be extremely helpful. And look, despite it being a market cap of $743 billion, I think it's still pretty early days if a lot of their, I won't call it bets, but a lot of their promises do come true. The bot, the compact car, FSD, energy still growing quite fast. I think we are still in it for a long, long ride. So I'm very bullish on that. TMDX, yeah, we looked at that last week, I think. Stock has gone up quite a lot. Business has reaccelerated. I was pretty surprised. So yeah, congrats to them. Congrats to them. I remember when they were back in $20 or so. Other than that, I have no extra comments to add. When is SoFi going to become profitable? Well, they did say that Q4 is going to be the first profitable income quarter, and then for the whole of 2024 as well. So there is that. Now it remains to be seen how they will reach that profitability. If there is some accounting tricks, we'll see. But yeah, Q4 should be the first quarter, and then 2024 is supposed to be the first year. Let's see how they do that. Meta, yes, yeah. I remember when I made videos about Meta when it was very much hated and everybody say nobody's using Meta, blah blah blah. But yeah, since then, quite a recovery, yeah, quite a recovery, and still the expectations are for it to grow quite fast in the years to come. Shares outstanding have come down. Free cash flow per share has come up. If you look at valuation-wise, we are only now getting back to its mean, and even then, it's really not that expensive. 21.7 times. And it's Match Group. It's the dating stuff, no? Yeah, valuation-wise, it looks cheap compared to its mean. Free cash flow has come down per share, so there's probably a reason for that. And the reason is, yeah, gross profit margin has come down. But overall, yeah, took a hit here. Overall, if you look at the overview, To be honest, it's not that crazy, huh? 12.4 times forward PE for a company that's expected to grow single digits in sales for the next coming fiscal years. Yes, double digits for EPS, but not that much, 13 and 10%. So yeah, not not that impressed. Let's say that, not that impressed. I hate dating apps. I hate them. Pure manipulation. AWR, what is that? American States Water Company. Okay, utilities is more interesting to me. Utility is more interesting here as well. Growth is not crazy. Let's see. Look, it looks cheap, but there is always a reason for that. There's always a reason for that. Struggles, profitability. Surgical, nope. Globus Medical. Globus Medical. Huh. I assume they bought a company here. Probably, right? Yeah, I assume they bought a company. What are the expectations? Okay, here there is more growth for Globus, which what do? They develop and commercialize healthcare solutions for patients with a certain disorder, spine products, fusion implants, stuff like that. Okay. Okay, so here the growth expectations are better than the other one for sales and for EPS. Interesting. GMAB. This is probably another one of those. Yeah, okay, so another one. Yeah, like I said, healthcare has a lot of interesting companies. Healthcare, biotech, they've got a lot of interesting companies to look at. What do I have here? Let's see if I can create a. I'll try it later on. For Tesla, it's interesting. Here you can basically see what happened in the last 10 years with regards to sales and the estimates and the actual sales numbers and EPS and the estimates as well. They barely miss on sales. They did miss a couple of times, but barely. EPS, same story. What's your favorite stock in January if there's a big correction? If there's a big correction, then I have a lot of favorite stocks. If there is a big correction, I have lots of favorite stocks. I still think that PayPal is one of the best risk rewards out there. But if there's a big correction, for example, Tesla goes back to, I don't know, 100 something, low $100, I will load the boat on that. So it depends, because I have a couple of stocks, 15 stocks in my portfolio. If things go, I mean, the big correction, meaning 50% shave, then yeah, I'll have to see which one goes down more than the other. But definitely lots of stocks that I would buy if it was 50% cheaper. PayPal can't even break the major trend line. No, with PayPal, there's no... with PayPal, there's really no questions to ask right now. Just wait for the earnings report and earnings call, because everybody's on the sidelines right now, waiting to see, can the new management turn this ship around? What's the outlook for 2024? Don't expect this quarter to be an amazing quarter that will blow everything off the water, because it's just the one quarter. But the quarter after that, plus outlook for 2024, should give investors a lot more information, including myself. But still, a tremendous opportunity in my opinion. I mean, stock that stabilize your portfolio, not if they drop. But you did say if there is a big correction. So if there's a big correction, it has to drop. Yeah, if there's a big correction and one stock in the portfolio it doesn't move, then obviously I won't add to that. I'll add to the one that has dropped more. So yeah, I mean, I would love to own more Tesla. I would love to own more Palantir. If I can own more the Trade Desk at cheaper, I'd like to add that as well. But yeah, all the rest, I'm pretty comfortable with the allocation I've given these positions, the SoFis, the Fibers, the Lemonade, which was just 2 to 3% of the portfolio. Amazon, second biggest position, very happy with that. Not planning on adding more right now. Mercado Libre, that's one, if it drops 50%, I'll buy more. But again, it has to drop because the market crashed, not because the business isn't doing well. That's the thing. I do not have Enphase, although I did say that it looks very nice at around $80 or so. I did not pick it up because I was busy with other positions, such as Robinhood, PayPal, SoFi, even HIMS. I traded a little bit. So yeah, I don't have unlimited cash, but the positions I picked worked out as well, and I'm happy that Enphase, the stock picked up. Still, by the way, just because the stock has gone up doesn't mean that it's out of the woods just yet, right? Yes, at 20 times PE and 15, 16 times price to free cash flow. Yes, it looks very cheap. It is cheap, but there's still a lot of questions to be answered, right? The outlook that they gave us for the quarter was very, very weak. If you look at the estimates right now, even for fiscal year 2024, sales is expected to drop 16%, EPS to drop 4%. Yes, fiscal year 2025, a huge reacceleration. So you're betting for a full year of nothing, and you basically want to skip 2024, which is fine, because you need interest rates to drop to drive demand. Oh, this chair is really uncomfortable. So yeah, I have exposure with Tesla with regards to energy. That's what I've been saying to people for a while. Extreme Networks, information technology, provides software-driven networking solutions worldwide. We talked about it yesterday, no? I think we talked about it yesterday or 2 days ago. I can't remember when I did the live stream. Probably yesterday as well. Let's see. With regards to the mean metrics here, yeah, looks fine. Let's see a bit more. Free cash flow has increased per share, that is. Okay, that's good. Yeah, looks not bad. Just this major overview. Sales is not really expected to grow that much, high single digits-ish, but EPS expected to grow close to 20% for the next 2 fiscal years, year-over-year growth, that is. Average price target sits 26% higher than where we're at today, just from 8 analysts. Again, price targets change over time. So don't really focus that much on that, especially not if you just have 8 analysts. Free cash flow is expected to drop, though, 11% in calendar year 2024. So keep an eye on that. Keep an eye on that. By the way, there's way more research to be done here, but this is basically just a major overview of the stocks that you tell me. CrowdStrike. Probably we did talk about CrowdStrike, Palo Alto Networks, SentinelOne, I believe a week or so ago. Yeah, clearly not cheap. 70, close to 80 times earnings, forward PE, but growing extremely fast, right? The expectations for them, basically sales growth of close to 30% for fiscal year 2025, year over year, after a 36% year growth. EPS 25%, sorry, and fiscal year 2026, another 26%. So yeah, it's expensive for a reason. It's expensive because, one, it's a dominant player, and two, it's growing quite fast in a profitable way. If we look at the mean metrics here, it's cheaper than its 5-year mean. Still expensive, but still cheaper on all metrics. So yeah, I mean, shares outstanding have been increasing, but free cash flow per share have increased considerably as well. Very, very strong company. Very, very strong company. If you want to look at the other one here, Palo Alto Networks, same thing. Free cash flow per share has gone up quite a lot. If you look at the mean metrics, now a bit more expensive than its 5-year mean. A bit more expensive. Growth rates here are still good, not as fast as CrowdStrike, but that's why you have a lower valuation as well. Take a look at how would it be affected by BTC ETF approval. Could 10x again? I don't know. I have never heard of it. Come on. Whoa. This looks like a pure pump and dump. So you have $21,000 into this stock. It's a bit much, huh? I mean, it's not profitable. What do? They design and sale of integrated circuits, final mining equipment products by integrated IC products for Bitcoin mining. If you want Bitcoin miners, there are probably better options out there. Yeah, I mean, doesn't really scream confidence here. I mean, there's a reason why this stock has not moved at all. If you look at a Bitcoin miner like Marathon, for example, has gone up significantly, and here the growth rates are much better for them, although still unprofitable, but much better. Mean metrics, yeah, I mean, we'll have to wait for the next earnings report, but still. And I don't think miners right now are going. I mean, the stock has gone up already for a lot of these miners in anticipation, probably because of this Bitcoin ETF. But yeah, I wouldn't want to be overexposed. And again, if you want to pick miners, pick big ones, not small ones, just because the price 2 years ago went up 10x when interest rates was at zero, and people were YOLOing. So yeah, that's just my opinion. What's the other one? Clear Spark. What's the CPA? No, I don't know. Owned Marathon and Riot 2, but could climb way faster. I'm ready to dump all my positions once profitable. Could also not. Again, this Marathon has already climbed, right? It's up more than 100% in the last couple of months. Riot as well. Since October, the stock is basically doubled-ish, has higher growth expectations as well. So yeah, I don't think we're going to see something like this where you go from $18 to $76 in a matter of a month or so. I don't think we're in this type of environment right now. And there's probably a reason why CAN hasn't moved much. Let's see. Yeah, so not a lot of information on that. All right, I think we'll keep it at that. If you've got some other questions, leave it now in the chat. Otherwise, forever stay silent. Igor with a question. Neil, are you looking at uranium companies' stock currently? I do not. I think I've written down one iron ore company, miner, Vale, but no, I have no intention in looking at uranium. I know it has been talked about in the last year or two, but yeah, I'm not in that. It doesn't really interest me that much. Well, it can, but it will just be a pump and dump once again. Yeah, it can, but I don't think we're in the environment right now where there's that type of craze, right? Like we've seen before. Interest rates are still very high. Again, I don't think we'll see that. But who knows? Yeah. So anyways, thank you all for joining me today. It was fun. As always, we're going to do this probably always now after the market closes. I'll start the live stream a bit before the market closes so we can finish the day together. And as always, ask questions as much as you want. We're going to look at interesting companies. I have already written down 10 companies that the viewers have given me in the last week or so. So I appreciate all of the input, really. And yeah, see you all in the next one, probably, in tomorrow's video. It's an interesting one. So see you all there. Bye-bye.